everyone, and welcome to ICM's first week ahead for the year. We didn't have much of an economic events happening for the past week, but we're gonna mention some of the key movers that are in the market for a while now, and then highlight the top economic events for this week, and then go over some of the major charts. So first, let's start with, as we all know, coronavirus cases. All the headlines are still impacting the market, especially now with some headlines from the UK stating that maybe the vaccine isn't effective with a new variant from South Africa. This could just implement a new risk for the market. So we have to just keep watching all these headlines, positive and negative headlines, because both they will definitely impact the market. The Brexit deal, as we know, they both ends the European Union and the United Kingdom were able finally to seal a deal, which will guide their relation for a while now. We have a bit of better certainty in terms of the relation, which is just affecting positively the British pound. It's very, very clear on the performance of pound against other major currencies. US fiscal stimulus that was approved recently, so we definitely have to monitor its impact, its real impact on the real economy. So when the market is just distributed, how they will be allocated in the economy, and what's the impact going to be in the coming weeks. So these are the key movers, the current key movers that are affecting the market. Now we're going to move to the economic calendar, which we're going to start with tomorrow from the Eurozone, from Germany. But the retail sales figures for November to show contraction of 2%. We remember that most of the European countries, especially the top ones, Germany, France, even the United Kingdom, they had a couple of lockdowns in November and also in December. So this definitely would impact the economic activity. Also from Germany, the unemployment change expected to rise by 10 versus negative 39 in November. Moving to the United States, ISM manufacturing PMI expectations that the activity ticked lower to 56.5 from 57.5. This is just definitely the impact of the extended spread of COVID. And also we have the weekly oil report by the American Petroleum Institute. On Wednesday, it's a bit busier with services PMI, Eurozone, United Kingdom, mostly expectations of readings to remain the same, similar to the preliminary, 47.3 for the Eurozone, 49.9 for the United Kingdom. Also, we have the PPI, which is expected to show an increase by 0.1% in November. It's still shy increase for producer price index. From the United States, ADP non-farm employment change expectations to show 75,000 jobs creation, which is very shy and very little relative to expectations of the economic recovery. The Bank of England governor will be having a speech. We have also the weekly crude oil report by US Energy Information Administration, and the minutes of the last monetary policy meeting by the Federal Reserve. On Thursday, we start with the German factory orders also to show a contraction by 1.5% in November. Construction PMI to rise a little to 55 from 54.7 in December from the United Kingdom. The consumer price index is one of the key figures that we have to watch out for from the Eurozone this year, to show a decline by 0.2% year on year. Retail sales to drop sharply in November by 3.6%. This is definitely showing how the economy just was affected by the recent lockdowns. So if we just see weaker numbers, definitely this will weigh on the market. ECB monetary policy statement, initial jobless claims to show a rise by 833,000, and the ISM non-manufacturing PMI to drop to 54.6 from 55.9. On Friday, it's the busiest day, with focus turning to the jobs report. But first, we start with the German industrial production for November, slight increase by 0.7%. Eurozone unemployment rate for November to tick to 8.5 from 8.4%. Moving to the United States, the jobs report expectations that the economy has only created 100,000 jobs in December. This is very little, and it should definitely be a concern for the Federal Reserve. Unemployment rate to rise to 6.8. There are some expectations also to remain steady at 6.7%, but we have to definitely also watch out for the participation rate. So if the participation rate drops, the unemployment rate drops. This is not just gains. This is not the proper gains that for the labor market in the United States. Also from the United States, average hourly earnings to rise by 0.2% in December. Moving to Canada, employment change to drop by 5,000. Unemployment rate to move higher to 8.5. And we end the week with the US Baker Hughes oil rig count, which is showing a return in activity in oil rigs in the United States. So these are the key economic events and releases that you have to watch out for. Definitely today we have also the OPEC Plus meeting. We're still waiting for the outcome. Also from the United States, the Congress will be approving the election results. Also from Georgia tomorrow we have the runoff. So these are the key events to watch out for this week. There could be some expected volatility coming out on headlines from these events. Now let's move to the MetaTrader 4 platform. I'm going to start with the euro dollar with the weekly chart. You can see a series of consecutive weeks of gains, 4 consecutive weeks of sharp gains. So, but now here we're just getting closer to key resistance levels. So this is what could just moving to the weekly chart now, you can see the euro dollar is trading almost near 123. So we're approaching to this congestion area here that took place in the second quarter, and the first and the second quarter of 2018. So this is the area that we're currently in. This is almost the low that was reached recently, 122. So we could be trading inside this area for a while until we have clearer drivers. Between 122, 124, 40 could be the coming area for the euro dollar. If we move to the daily chart, you can see here that the 100-hour and 200-hour exponential moving average, we're moving again away from them. So we had the first impulsive move, a correction, then another impulsive move, which is just likely to have another correction on the long run, maybe towards 120, if the dollar strengthens or if we have a certain format for the euro to weaken against the United States dollar. If we're gonna go closer to smaller time frames, you can just draw this channel here that we've been trading in it for a while and just trade the boundaries of this channel. So we're on the smaller picture, we're trading inside this range between 122.10 and 123.10. A break above it could just lead to another push higher towards 123.65, the upper line of the channel, while a break back below the bottom line of the channel or 122 could just be bearish again for the euro against the United States dollar. Moving to the British pound, which is just correcting after touching 137 level, you can just start with the weekly chart. So you can see this slight move lower for the British pound. That's just close to the bottom line that we were trading at for the pound in the first and the second quarter of 2018. So this is just a key area for the British pound. If we're able to trade above it, we could be just entering another range between 137, 143.80, which we could be trading in for a while. However, any reversal here or a clear reversal here could just pose another push lower or another move lower towards 135.20, which should be a possible correction for the current move. So this is just could be attracting more buyers if we have more positivity around the outlook of the British pound. So watch out for any dip back below 34.85. It could be bearish, while a move above 37.20 could just lead to another move higher towards 39.50. The US dollar against the Japanese yen, tight moves, but however, the general trend is lower. So you can see here the move. You can see here how we're trading sideways down for a while. On the bigger picture, definitely we have to highlight the previous bottom, almost 101, 101.20. While on the upside, we need to move back above 104, 104.50 to be just positive again. So this is the range that we're currently trading out for the dollar against the Japanese yen. If we just have a clearer look on the daily chart, you can just draw a trend line combining these stops here and wait for any break above the trend line in order to turn bullish again on the dollar yen. Else, we could be just moving sideways lower again towards 101 level. The dollar against the Canadian dollar, the dollar against the Swiss franc, we're seeing the dollar weakening across the board. The pair is just trending down. The Swiss franc is among the top performers. However, we could be approaching some possible support near 86.93, which was a previous bottom ahead of this collapse that happened in 2015. So this could be the possible hold zone for the dollar against the Swiss franc, while any reversal back above 89.85 could just turn positive. So this is the range that we're trading in for the dollar against the Swiss franc for a while. If we move to the daily chart, it's a bit clearer the sideways move that took place in the past couple of weeks. So you can just highlight smaller levels, 89.15, 89.15, 89.45. So this area here as support and resistance. So we have a smaller range and a bigger range. A move back above 88.30 could just turn bullish again for the pair and drive it higher towards 89.20. So this is just definitely relying on the dollar strength and whether we're going to continue with the current dollar weakness. Moving to the Australian dollar, which is pushing higher also for a while. So you can see the series of bullish or positive weeks to the upside. So if you just want to highlight some possible resistance, you can just highlight the previous levels, the previous stops that were logged. 78.18, and on the bigger picture, 81.30. Definitely 80 is a key level. Trading back above 80 is something for the Australian dollar. So this is just I'm just highlighting the key levels on a bigger picture, on a bigger time frames. We're using the weekly time frame, meaning that this range could hold for a couple of weeks. If we the one that we are highlighting, so 74, 78, 20 for the Australian dollar. If we go closer to the daily chart, you can just draw the trend line combining the bottoms, the previous bottoms. If you want to just have a little bit harsher push on the Australian dollar, you can use another trend line combining the recent bottoms, and any trade below the recent bottoms could just mean that the trend is weakening a little bit. So watch out for these moves. Moving to the hourly chart, you can see here a little bit of a double top. We had a consolidation trading in a while, then a push higher, and now we're trading sideways again. So what you can just highlight is this range for smaller trades, 77.40 and 76.80. This almost 60 pip range. A trade back below it could just push the prices lower towards the previous stop of 76.35, while another move higher could just trigger a move towards 78.10. The New Zealand dollar against the United States dollar, similar formation to what we're witnessing on the Australian dollar. This is the weekly chart, series of consecutive gains. However, similar to the euro against the dollar and the pound against the dollar, approaching to these top levels that were traded earlier in 2018, this is the possible range that we could be stuck in for a while. 71.50, 74.37. On smaller time frames, moving to the daily chart, you can just highlight the previous consolidation area, 70 psychological level to 71.50, meaning that a drop below 71.50 could just trigger another correction, a bigger correction for this move towards the 70 psychological level. The US dollar against the Canadian dollar. So this is the weekly chart. Commodity currencies are just performing really well against the United States dollar. We can see this reversal that took place here. You can just highlight the previous bottoms, 25.18, and on the bigger picture for the Canadian dollar, while also on the resistance level 29.60. You can see how the market retraced here exactly from the previous bottom, which was once a support and then turned into resistance, making this a possible valid range between 25 and 29.60 for a while to continue on the dollar against the Canadian dollar. If we go to the daily chart, you can just highlight smaller levels. A move above 28.40 could turn again bullish for the Canadian dollar, for the dollar against the Canadian dollar. And as long as we're below it, we could just be tackling further lows near almost 125. Gold price is pushing higher today. We talked a lot about the channel that was taking place. This is the weekly chart. You can see positive weeks for a while. On the daily chart, you can just highlight this flag that we talked about last week. And you can see how the market gapped higher on the edge of the flag, or the channel gapped on it and then pushed higher to 1935. Now, the possible coming target, 1965, 1970 area, this could be the possible target. So watch out for any possible resistance if we move higher to this level. While any move back below moving towards the channel again, back below 1900 could just turn bearish again for gold prices. If we went over for the H4 chart, we were highlighting also this trend line. So watch out for this possible trend line move. You can just, in order to set some targets also, you can just parallel to this trend line, you can draw another line which could just form a channel where the top of the channel could be the possible level, and it's coinciding also with the previous top. So watch out for this area here. It's a very key area for gold prices. Silver. weekly chart, you can see also silver is pushing higher, trading near its almost highest level since August, trading at above $27 per ounce. So definitely we need to highlight the previous top, almost $28.80 to $30. So this is a key range for a key area for silver, while moving back below 26 is just bearish again and could lead to a bigger correction for the current rally. And this is just clearer on the daily chart. You can just highlight it. The previous top, break above it. Any break back below this stop here, 26, could just turn bearish again. Also, you can draw this trend line combining these bottoms that we were trading currently at 1, 2, 3. The bottoms we're still holding, and now we're moving higher. Also, you can apply the same method that we used with the channels to this. Could set you similar formation to what we saw on gold. Moving to WTI, as everyone is waiting for OPEC Plus meeting, the oil prices were higher a little bit on the day. However, we're seeing a reversal again. So on the weekly chart here, you can see how the market is stuck near the 200 week exponential moving average. You can just trade in between the 100 and 200 for a while. On the daily chart, you can see this all full reversal. This is just bearish. Watch out for the meeting of OPEC. If they fail to just reach any compromise, this could just definitely impact the market negatively. So what we can do is just highlight the 50 level, 244 level, the one that we were talking for a while about. You can see that the 50 level was a key support previously, and also the 44 level was key resistance for a while, and previous also key support. So this could be the possible zone that we will trade in for a while on oil, as long as we don't have any geopolitical factors. The Dow Jones is pushing higher on the day, also moving to record highs. Target 31,000 is just a possible target for the Dow Jones, as long as we're continuing on the same. In order to just have similar or possible targets for the Dow Jones, you can just go for the latest correction. You can use the top that was valid there, and then the possible correction, and go for possible extension. So you can get the 161.8 retracement, which is almost near 30,930. So this is, as you can see here, the market once was able to break above the previous top, following the correction, moved to the 123.6, and then moved lower to the 100%, the previous top, double bottom, and then moved higher. So this just gives more validity for the levels that we are talking about. A move back below 30,585 could just put again in focus 30,000 level, and as long as we're above it, we could just be tackling again 30,940 for the Dow Jones, and even 31,000. So watch out for any break back below 30,500, because this could just accelerate the move lower. Definitely any headlines regarding the electoral college, anything regarding the election would have an impact on stocks, but in general the risk sentiment is still on. So this is all for today's session. If you have any questions, please write them down. Just like to remind you that all the information, news, analysis, and opinions mentioned in this week ahead, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. Perfect. I believe this is it for today. Thank you all for joining, and wish you a great trading